Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. The U.S. rate market continues to trade firm. Coming out of month end July, starting a new month, 10-year in and around 121, the prior lows in and around 112 through there. Clearly, we target just a little bit inside of 1%. Delta variant now in the United States, clearly a hot topic. It's been that way on a global basis. Certainly part of the rate story, not the entire story, but certainly a part of it. Looking at the administration, looking at what's coming out of the CDC, how that trickles down now into the fall, could very well change the dynamics economically in the second half of 2021, ultimately from a health perspective, health first, but we're just in a much different place now. But health aside, how restrictions roll out, how different states handle this needs to be factored in. The problem is it's very difficult to model. With regard to the Fed last week, clearly kicking off the taper discussion now, heading into the fall. The Fed chairman discounting Delta variant. We're not too sure how that's going to play out, though, but he is referring back to prior times where we have had these outbreaks, which, the economy in general has been very resilient. With regard to inflation, inflationary pressures clearly still there. This is a much different dynamic than when the Fed changed their framework in August last year of 2020. Now we have inflation preceding employment. So with that, we look ahead to Friday's employment number. This job market is pretty tight right now. And although there are still a number, millions of workers displaced, which we hope will all find their way back into this job market, the job market, for all intents and purposes, is very tight. And the Fed needs to consider that. They have, if you listen to the dialogue over the last couple of months, and they will look at labor force participation rate. They're going to look at the components this week. It's not just going to be about the headline number, but if you do listen to the Fed dialogue over the last couple of months, they have certainly changed their posture with regard to labor force participation rate, with regard to where things were pre-pandemic, right? So that's a reflection of the fact that this is a much different dynamic. This is a much different crisis that we've gone through. These are different times than what we saw prior to the pandemic. And the Fed needs to factor that into their thought process going forward. So this taper discussion is going to continue. If you listen to St. Louis Fed President Bullard on Friday, he wants it wrapped up by March. We're not priced for that in terms of risk assets. If you listen to Fed Governor Brainard, clearly they want more data. And it's not going to be this month's data. This number will matter, but one data point is not going to change the mindset for the Fed. The Fed wants more data, and that data is going to roll out into September. So in terms of tapering, if the data does cooperate, and we do think the data will matter, you're looking probably at the earliest November in terms of some formal announcement, maybe December, with tapering to begin at the beginning of 2022. That's been our baseline scenario, but certainly the data does matter here, as does the ability for the Fed to continue to move this dialogue forward to pull back the emergency accommodation that was put in place in March of 2020. This week, ISM on the ground. Obviously, we get another claims number. The highlight will be Friday with the employment number, and we will get the Treasury's quarterly refunding announcement midweek. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, wishing everyone a great week.